Imagine waking up to see silver spot price at $30 on your phone, but when you go to buy a single ounce, the price tag says $170. Or worse, you go to the bank to withdraw your savings to buy that metal, and the teller tells you, "I'm sorry, we need 7 days notice, and your request is pending manager approval." The smoke is clearing, and the exit doors are narrowing. We aren't just looking at a price increase, we're watching the financial system fracture in real time. Welcome back to Peak Life Wealth. If you've been following this channel, you know we've been tracking the JP Morgan internal leaks and the traps being set for the middle class. But today, the game has shifted. There is a massive disconnect growing between the paper price of silver you see on the news and the physical price you have to pay to actually own it. While the COMEX tries to hold the line, the US Mint just sent a shockwave through the market with a major repricing. Meanwhile, banks are quietly changing the rules, moving toward bail-in protocols that could lock you out of your own capital. Today, we're breaking down the 3 pillars of this collapse: the US Mint's $170 silver signal, the 4.4 billion ounce bank short position, and why your local bank might not let you have your cash when you need it most. Let's start with the bombshell. The US Mint recently repriced Silver Eagles into the 170 range, even while the spot price hovered around $90. Think about that. That isn't a premium. That's a 90% disconnect. The Mint is telling you what they think silver is worth when the paper game breaks. We're living in a 2-tier reality. Tier 1 is the digital illusion, the COMEX paper contracts where banks trade pretend silver to keep the price suppressed. Tier 2 is physical reality, where the metal actually lives. Comment below, have you tried to buy physical silver in the last 48 hours? What were the premiums like at your local shop? In the last 24 hours alone, 4.2 million ounces were pulled out of the COMEX. At this burn rate, registered inventory could hit 0 in under 30 days. We've seen 169 straight days of inflows into the SLV, yet the price is shoved down through flash crashes, designed to make physical withdrawals cheaper for big players. They're shaking the tree to get you to drop your silver so they can scoop it up before the vault doors lock for good. But here's the most dangerous part. Why is physical so much higher? Because the banks know the paper game is ending. Look at the math. In the US banking system, there is roughly $41 billion in physical cash held against $2.3 trillion in deposits. That's about 1.8%. If just 2% of people want their cash at once, the system is mathematically bankrupt. This is why banks like Chase and others have quietly updated their terms. Have you read the fine print lately? They're moving toward a model where they can require a 7-day notice for withdrawals. And even then, a manager can deny the request based on liquidity needs. History tells us capital controls always precede bail-ins. We saw it in Cyprus. We saw it in Greece. Now we're watching the framework get built in the West. They want your wealth trapped digitally, so that when the COMEX breaks and silver rockets, you can't get your currency out to buy the one thing that protects you. While US banks try to manage panic, the rest of the world is moving. The US, EU, and China have officially reclassified silver as a critical material. This isn't just jewelry anymore, it's national security. The price premium in Shanghai is consistently higher than in London or New York. The metal is draining east. Why? Because Western banks are sitting on an estimated 4.4 billion ounce gross short position. They're underwater and desperate. We're seeing backwardation, where silver now costs more than silver later. Lease rates have spiked from near 0 to as high as 30%. This is the heartbeat of a dying market. Some banks, like TD in Canada, are already getting blown out of shorts as silver crosses key levels. The new floor isn't $30. According to analysts like Peter Schiff, we're looking at a floor of $70 with a trajectory toward 300 plus as the COMEX finally breaks. We're approaching the perfect storm. The US Mint has signaled the real price. The banks are locking the exits, and physical supply is vanishing into the east. The question isn't whether silver will hit triple-digit numbers. The question is, will you be able to get your hands on any when it does? If you found this breakdown valuable, you need to stay ahead of the next move. We're tracking COMEX inventory daily. Subscribe to Peak Life Wealth and hit that notification bell. When the squeeze happens, minutes will matter. Like this video to help us bypass the algorithms that want to keep this information suppressed. Download our free inflation-proof wealth guide in the description below. The system is showing you its cards. Don't wait until the out of order sign is hanging on the bank door. Protect your wealth. Protect your freedom. I'll see you in the next one.